there are three symbols I have to talk to you about this week. And it's super important. One is an IPO, super interesting. It's breaking out to new lifetime highs. One is an old darling of Silicon Valley that is absolutely in trouble. The question is it a buying opportunity or is it an absolutely stay away? And the third symbol is something that is really fascinating going on right now that literally could go up 100 to 200%, literally in a quarter. So I want to cover those three symbols for you. And then I have crypto, bonds, and the stock market that I just want to do an update on too. So we've got a lot to cover. Stick around. Hey everybody, this is RC Peck with Fearless Wealth, and wow, do we have a lot to cover. So let me jump over to the price charts because that is one of the first places that I want to start, and I want to get one of those price charts set up before I show it to you. So let's jump over. Filed for bankruptcy in May of 2020. Just gone. Been around 100 years renting cars since, before your grandma was born. Gone. The pandemic crushed them. They went through bankruptcy. But guess what? Rising Phoenix, they came out of it and they had a brilliant, I love this idea. They had a brilliant idea. Their idea is, you know what? No more shitty cars to rent. No one wants to rent a Nissan Elantra anymore or a Ford Fiesta. Sorry, no one does, okay? No more, Hertz is like, we're not gonna be a dumping ground of crappy American-made cars anymore. What if you could rent a super awesome car from us that you may not want to buy or be able to buy? And so what are they doing? They're buying 100,000 Teslas. There's a Tesla on the front page of it. It's practically an ad for Tesla. And I think this is a brilliant idea. But really, who cares what I think? Because the market doesn't care what I think. What we want to care about is what the market thinks. And the way we do that is by following price. So we come over here and look at a price chart of Hertz. They IPO'd in July of this year. They immediately fell. They immediately fell by 50%. Now the ticker symbol of Hertz is HTZZW. And it IPO'd at 12 bucks. It dropped down to $6. And guess what? It's at new lifetime highs. So disclaimer, this channel's not about giving advice or telling you what to do. What we do know about price is new lifetime highs equals strength. This is a sign of strength. Now here's the great part about it. You can buy this, and if it breaks down to say 11 bucks, you're wrong. That's not even 20% away. That's about 18% down. Literally, you could take 10 grand, throw it at this symbol, and really all you're risking, generally speaking, is 1,800 bucks. For the upside to be potentially multiples of this, I'm really excited about this. Look, it's a brand new stock. We have no idea what it's going to do. But what we do know is the market topped on September 2nd. The S&P peaked out. Now, the S&P is at new lifetime highs. But in the time period that the S&P peaked and fell 5%, the NASDAQ 100 fell about 8%. This stock has gone up 60%, if I got that right. Let me just go look at that. I have to squint these days. It's up. I don't want to put my glasses on. It's up 60%. The market's liking this. The other side of this is Tesla. And Tesla is not one of my three symbols that I want to show you, but I just do want to show you Tesla here. Tesla is at new lifetime highs here, right? Now, this whole pop here isn't necessarily on the Hertz buying 100,000 cars, but hey, it doesn't hurt when a publicly traded company comes out and says, we're going to buy 100,000 of your vehicles and pay retail price for them. When can you get them to us? So pretty amazing. I actually said that this year GM would outperform Tesla, and I'm wrong. What's great about predictions is you put something down on paper and you watch and say, am I right or am I wrong? And what I mean by that is price agreeing with what I'm saying or not. So Tesla was down about 39-40% this year. And now if you look at where it is from, again, it's up year to date about 40%. So that's in a way a turnaround story itself. I don't think you can call Tesla a turnaround story, but pretty amazing. Okay, so that's the first symbol, Hertz, HTZZW. Super I'm super intrigued about following that. Okay, the second symbol is, drum roll please, Facebook. Facebook's down 18% since the September peak of the market. During the same time period, the S&P fell 5%, the NASDAQ 100 fell 8%, but they have both recovered. And guess what? Facebook is continuing to accelerate to the downside. It's down 18%. So that's not good. Finally, maybe this is the crack that can get Mark Zuckerberg out of the CEO position, maybe pop him up to chairman. I do think he's probably the most dangerous person on the planet. Now, this could be a buying opportunity if this stock, I don't know if it's going to stop here down at kind of the, let's just say from the high, if it drops down to ish 23%, that would be kind of the first potential buying opportunity. The second one, if it breaks through that, is down about 35%. But those are the first two places where I'd even think about looking at owning Facebook. I wouldn't do anything with it right now because it's accelerating in the wrong direction. So, I would love to see Mark Zuckerberg out from CEO. I understand he has the voting shares, but we need to get some fresh people in there and actually help out Facebook so they can stop inciting violence all over the world. But that's a pretty big story now that the price is actually listening, like, hey, you know what? Get your shit together, Facebook, or we're not going to want you. There's lawsuits coming. There's AGs, attorney generals that are going to be filing suit, even naming Mark Zuckerberg in their suit. I think this is a time period now where there seems to be this collective assault on Facebook that there wasn't before. And you're going to see more and more articles from different companies absolutely going after Facebook. And the answer is stay away from Facebook, right? It may be a buying opportunity if it's down 22% or 35%. So that's Facebook, guys. I find that very exciting what's going on because maybe there'll be some change coming. Okay, the last symbol before we get to crypto, bonds, and the strongest market is, we've got to talk about this. We're going to talk about, drumroll, natural gas. Now, this is actually natural gas right here, and it looks super crazy. So I'm going to just tell you what I'm seeing. Here, back in 2018, it peaked. I'm just going to put some resistance and support lines in right there. So it just peaked. It couldn't stay above that. Every time it got above, let's call it just easy math, $5, it would come back down. And there's kind of this crazy whipsawness going on. But here's what's happened. Natural gas broken above that $5, popped right up to the 625, came back down to this, found more buyers. So let me do this. Let me zoom out a little bit more and just show you what I'm seeing here. So it had to get above that. And if you kind of screen your eyes across the screen, you can kind of see that support resistance going across this. This is one of the things I teach in my trading courses, how to think with your eyes and how to understand price in a simple way. Okay, so it broke above, came back down, and now it's moving up. The next thing it's got to break above is just this little sell-off area here. Call it the $6 to $6.25. Well, nat gas, right? And this is an index, so it's 1 day old, but we can look at UNG in a second, is taunting with that 6.25 again very recently. If this thing breaks loose, the next place it's going to want to go, possibly, up here is about $15. That's 150% gain. Now, here's the great thing about this, and now I want to zoom in. So let's call it 150% upside. If you're wrong down here. If it breaks back down here again, right? So if you bought it at $6 and it comes back down here, let's just say 20% down, right down here, you're wrong. So you can lose 20%. So if you put 10 grand in, you know what your loss is going in. So you're risking 20% to make 150%, also known as risk $1 to make $7. That's a very, very good risk reward ratio. You can go by UNG, which is a fund that trades it. It's heavily traded. Today, as I'm looking at this, it's trading right now. The market's not even done for the day. over 11 million shares, and it's a 20-some dollar symbol. So there's lots of liquidity here. The reason why you don't see its old highs over here is because this is a tracking symbol. So figure this symbol can go up way past this area. Expectation would be 150% on this. Same thing, you got that 20%-ish downside on UNG. And if you want to be a total baller, you'd buy BOIL, B-O-I-L, B-O-I-L. And it's giving you a 2x. So here's what's crazy about this. It only corrected down about 26% when UNG only corrected, when Nat Gas only corrected down about 18%. It should have done 36% down, but it didn't. So this leverage fund should have been down 36% during that time period, and it wasn't. That's telling you how strong Nat Gas is right now. So you could use BOIL, B-O-I-L, or you could use UNG. But this is how you trade properly. And this isn't necessarily a trading channel. This is about how to think smart and have clarity and control over your finances. So those were the 3 symbols that I want to talk about. I understand that probably turned out to be 6 symbols. Okay. Someone asked on the YouTube channel, what do you think, picks and shovels for crypto going forward, or the actual coins? And he was referencing gold. Like in the gold rush, it would have been better to sell the picks, the shovels, the jeans, the food, rather than actually go look for gold. So on the screen here, I just put in one reference here, which is September 24th, which is when China fully banned and made crypto illegal. Right here, this blue bar, if you can look at the screen, that blue bar, that's Bitcoin. And since China banned crypto, Bitcoin is up 40% and Ethereum is up 40%. So the 2 main cryptos on the planet are up 40%. Now the other bars on here, I don't necessarily want to call them picks and shovels, but they're not a pure coin play. Right, they're actually equities you can buy to get exposure to crypto. So you don't even have to buy crypto directly. And I know there's an ETF now, BITO, to buy crypto, but you can buy stocks, equities that have basically all their exposure to crypto. HUT 8 Mining during the same period is up 54%. Silvergate Capital is up 54%. Some of you have heard of MicroStrategy. They're actually not doing that well, up only 22%. So as of right now, you'd rather just buy the coin. So I would say right now there are some picks and shovels that are doing better, but everyone, look, Ethereum and Bitcoin are still doing great. And basically they gave the middle finger to China. We don't need you to crush it. As far as the best countries, the best parts in the world, I wanted to just quickly show you what happened from February 19th of 2021. So that was before the market crashed and the world changed with the pandemic, and we had winners and losers, blah, blah, blah. So since then, you've got the S&P, which is the red thick bar on the left of the screen. That's the S&P 500 up 38% when the market peaked in February of 2020. What I also wanted to show you, because you are being scared almost daily and you have not been taught to have a filter. You have to teach yourself to have a filter. It's one of the things I teach in my investing training course, to get a filter so you can just eliminate all the bullshit that gets thrown on your cell every day and live in an attention economy. People want your attention, and they will do anything to get it. You have to learn how to filter out all the crap. So this is kind of that. If you look at the screen, all those bars are positive. Even the lowest one, which is emerging markets, which is, I don't even know what color this is. It's still up 21%. So all the markets around the planet are all at new highs of that 2019, from 2019. I keep saying 2019. I'm thinking it's February 19th in 2020. That was the market peak before the COVID crash. But what I want to point out to you is all these markets are higher. The market is stable. The equity market is stable. What I do want to point out is this is emerging markets, and this black one is emerging markets without China. So China is actually the real loser right now. And let's see, Europe right now. What color is Europe? I got to find Europe. Europe is this one. So Europe's up 21%. Not really doing that well. It's kind of right there with emerging markets. I've talked in many videos where when China and the US went to war, they're not going to get hurt. Europe's going to get hurt. And you're kind of seeing it here. Okay, I got one more thing and then we're going to hit the pause button. We have a lot this week. You may want to watch this twice. Lastly is bonds. This is from the February 2020 high. And bonds, it sounds very hypey and just crappy marketing to say bonds are dead, because they're not. If you look at the screen here, the big tall bar in the middle, that skyscraper, that's inflation protected treasuries. And that's really the game in town right now when it comes to bonds, is if you have to be in bonds, you may want to seriously think about having an exposure to inflation protected bonds. These are US Treasury inflation protected bonds. The ticker symbol is TIP. It's not the only one. But really, that's the game in town here. Over here, the saddest thing is there's no bar here. That's international bonds. International bonds are actually doing the worst. All these other bonds here are all US bonds. So just like US stocks, US bonds are still the place to be in the world. If someone has taught you to diversify internationally, they are teaching you to pay a tax that is unnecessary. So guys, gals, everyone, super long video this week. Just a lot to cover this week. Guys, leave a comment. Really, leave a comment. Hit the like button. Become a subscriber. It all helps getting this video in front of more people. If you want to know how you can help, that is an absolute way you can help. And if you like this video, you're going to love our other videos and you'll absolutely love our training. It is a truly life-changing experience, our training. Often people say it's actually the best training or the best education I've ever gotten. Not just about investing or equities. It is literally one of the best trainings ever people have ever done. And these are people who are very accomplished, not that I need to defend them. These are very accomplished people who they're typically the people that all of their community goes to get help around finances. So I'll see everyone on the next video. Okay, bye.